Welcome to Nifty prediction. My name is Narendran. To join my WhatsApp group, I am charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. Let's go to the review for Monday and then we'll go for a prediction for Tuesday. Nifty ended up in the negative 14,675.70, 306.05 points in the negative. 2.04% in the negative, opened around 14,999.05, which is above the previous closing, but still it is in the volatile level. I will explain you. And market has went high around 15,010.10, low went around 14,635.05. Let's go to the prediction review. The pre-opening is around 14,999.05, which is above the previous closing, but still it is not in the above volatile level 1. The volatile level 1, which is around 15,068, but the market has opened in between the volatile level 1 and volatile 2. And as we know, the data is clearly shown all three results are possible. Whenever we get evenly poised means we need to keep both options in hand. That is the advantage. Advantage as well as sometimes it will having a disadvantage, but still you must have to keep both options in hand whenever the data is showing like that. So you need to protect by investing both options, because if it is break down like this or break up and go towards positive, then you can book profit one side and keep another profit in a loss. Also will make some huge profit. For example, we given a call in the 14,700 as well as 15,300 call option, both we bought both put together 70 points, but it has went to 148 in the put option and we got huge profit yesterday. I'll explain how what are the calls given in the WhatsApp, and you can see how it has went from the level after the opening. You can see the market has opened 14,999, which is below the average of par pivot level, which is we know the basic rule: anything below the pivot level market will try to go down, anything above the pivot level market will try to go up. So if we take the stop loss in that particular level 15,048, so 15,010.48, that particular level is not broken. It has broken all the key levels of stop loss, but still this one key level which is not broken on this particular day, and market has started to fall because we know that all three results are possible. So that is the reason we don't want to take any risk. So we has to buy both options and wait till the market closing, but be given a call for 1 week tenure, because if the breakdowns are happened, it might go heavily. So once it is started to fall down, it has fallen down heavily and went down on, and it has gone in between the support level 5 and support level 6. So the target of 14,569 got open because the low is not matching at all. So we have open target around downside, as well as we still have the target of 15,262 as we saw earlier. So both targets still we are having, so it is not going to be easy if we have these kind of both targets. So that is the reason, as well as the today's Tuesday data also showing both a possible result. Let's go for the prediction for Tuesday, because we need to have the clear match. That is the thing. If the low is matching means we may see the market recover, but we have the open target as well as 14,569, and earlier Thursday, I think the market is still given a positive side target of 15,262.13, I think. So that is target also still open, and here we have this target of 14,000 14,569 is also opened. Let's go to the prediction for Tuesday. Once again we have the volatile data, and this time we have the evenly poised in the absolute frequency, which means 33.33% chances on all sides, which is bullish, bearish and flat. All three results are having equally poised, and we have the both targets in hand, which is 15,000 to 62. Why I am reminding all the times, because we need to know these things, then only we can able to trade. That is the reason small trade is better. Avoid trading, otherwise you need to keep both options, at least minimum of 10 in the options, both sides. Only the thing, if the market is close in the flat, then both options will raise is from the level. Otherwise, if any breakouts or breakdown happen, you may get huge profit. This is the positive side target still open. Negative side target, which is 14,569, we are having. So both side having the chances to go. So the ratio is indicating positive 7:2, the average indicating 1:2 on the downside, but the difference of 1 point, which gives you volatile possible, but the weightage indicating negative. So two indications are showing either side opposite as well as downside showing, but the evenly poised comes means we need to play much more cautiously. It is not going to be that much easy, but if breakdown or breaking up on the positive side, it might go bullish. If breakdown happen means it might go heavy bearish as well. So let's go to the levels, how the pre-market opening is going to be. From the par value, if we take anything above this par value, which indicates the positive side target, but the negative side is little bit heavier, so all three results possible means we need to play much more cautiously. But the par value is showing that anything opens above this level, which is more than 83 points in the negative, it will try to move towards to positive target 1, positive target 2 and positive target 3. So we have the chances to go positive direction, but still we know that the absolute frequency is evenly poised, means we need to play cautiously, because it might not go towards to positive as well, because all three results possible, still the market is having the chances to fall down. So the basic rules how we need to trade on this specific day: if the pre-opening anything opens above the volatile level, 26.42 points above that level, the market is indicating extremely bullish with a stop loss of overall average 14,647 minus 10 points, 14,637.82 is the stop loss you need to maintain for the extreme bullish market. A normal bullish market, you need to keep stop loss in the support level 1. Anything opens positive 1 point, it is indicating bullish, and the stop loss is 14,671 minus 10 points, 661.30 is the normal bullish market stop loss. And the bearish market, anything opens below 23.48 points, indicating extreme bearish with the stop loss of overall average, which is 14,647 plus 10 points, which is 14,657.82, which is not having much difference, around less than 5 points. So it is kind of a weird, but still all the three results possible. Even if it is breaks those level, it might go heavily. So this is the extreme bearish stop loss. So extreme bearish might not happen, but still we have the open target in the 14,004 567 or 4. I'll check out and come back to you that, because I've forgotten that point. What is the target level? 569. So 569 is the target we are having, so that much level it might go today. And if anything opens minimum of anything opens minimum 1 point in the negative, and it is indicating bearish market with a stop loss R1, which is 14,694.78 plus 10 points, so 14,006. So it is 14,000, sorry, 14,704.78. This is the normal bearish market stop loss. So it's not going to be easy. You need to keep both options in hand, and I like to go for my predictions calls in the group. I have clearly mentioned that 851 itself, asking the customers to buy 14,300 call option as well as 15,300 call option as well as 14,700 put option at the current market price, while the market opening itself, because if it is breakdown it will go heavily, and as expected it has broke down. This is the level which I asked to buy and hold for a week, because it might broke down, it might go heavily as well. The market has opened around 48 points, but it has went almost 148. But I asked to exit this call. I asked to exit around 157. It was traded somewhere around 129. After that it has gone down to 98, and then from that 98 it has went up around 148. So the closing as well, it has closed around 150 or something. So it has very good, it has given very good return. And I have specifically mentioned this because this kind of market trading days, it might breaks means it will go heavily. That is the reason we want to hold both options. Why? Because we don't want to take any risk, because you see, and the one side which gone down from 28 to 7, it has fall down almost 21 points. It has given a loss of 21. But whereas this particular level which gone from 48 to 127, which given almost 70 points, so which means you still end up with some 4,000 rupees profit. So that is the way you need to play. And as I spoke to you, this is the level for the today's market: extreme bullish pre-opening and stop loss. Normal bullish opening, you must have to be in the positive and the stop loss, and the extreme bearish pre-opening must have to be below and the stop loss, and anything opens even in negative and the stop loss. So the only thing is, this kind of day, small traders strictly avoid trading, stay away from the market, or else if you want to trade, must have to keep buy options both side, minimum of 10 rupees each, C as well as P in the option. Only thing, it may fails you if the market is opens somewhere in the flat and stays for a long time in the flat, then only both options will erase from 10 to 5 or something like that, or maybe it will go 7 or 8, something like that, until if anything breaks out positive side or negative side, this one may go towards to 30, even 50. Let's see how the market is going to give us on Tuesday. Thank you.